What's going on, guys? In this video, I want to go over how you guys can start to outline and build a trading plan. Okay, so in this video, we're going to cover some of the topics, some of the things that are going to need to go into your trading plan so that you guys can be well prepared when it comes to trading these markets. Again, my name is D'Anthony with evolutiontraders.com. I'm a full-time options as well as futures prop firm trader. I run an educational mentorship that you guys can find down in the link below in the description. So again, what we're going to do is make sure that our trading plan is very clear. Okay, so we're not going to have, a bunch of information on here that is irrelevant to us. It needs to be crystal clear. It needs to be simple, not only if you're an experienced trader or you're a beginner. The simpler this trading plan is and the more clear it is, the better you're going to be able to implement it and to work this strategy and the plan. So what you're going to need to do is set a list of goals and a list of objectives. You want to define specific and achievable trading goals, guys. Not you want to buy a Lamborghini in a week, not you want to retire in a month, not you need to make $10,000, today. You want to set clear objectives for the week, for the day, for the month. Have realistic monthly targets. So for example, if you're just starting out and you have a $1,000 account, I'm not going to look to 10x that account in 1 month and make $10,000. Is that realistic? No. Can it happen? Sure. But if you try to obtain goals and objectives that are far beyond your reach, you're only setting yourself up to fail. So for example, if you're starting off with a $1,000 account, or even if you're trading a prop firm account where you have $2,000, $3,000 worth of drawdown, I would say that if you can make $40, $50, $60, $70 a day, that's a realistic expectation goal for you to kind of stop trading on the day. The same thing is going to be need to put into place for daily loss limits. Now, even though, for example, let's say you're trading for a prop firm like Top Step and they give you a $1,000 daily loss limit, that doesn't mean trade like an idiot until you lose $1,000. Definitely set a lower goal, a lower target, that if you do lose, let's say $100 or $150, you stop trading on the day. You come back tomorrow with a clean chart and a clean mind. So again, based on what your account size is, you need to have realistic expectations. Write those down. That's going to be the first thing in your trading plan. The next thing is going to be, what assets are you going to trade? So if you trade options, which sector are you going to trade? Financials? Are you going to trade EV? Are you going to trade oil? Are you going to trade technology? Are you going to trade retail? Which asset class are you going to trade? If you're on the future side, are you going to trade oil, ES, the NQ, the Russell, the Dow? Pick one and focus on one, and then expand your horizon. So for me, I trade the NQ, which is a NASDAQ 100. So I'm going to be focusing on the NASDAQ 100 chart each and every single day. The second thing to kind of understand is, and what needs to be in your trading plan, is what time frames are you going to trade? Are you going to trade in the beginning of the day? Are you going to trade all day? Are you going to trade at the end of the day? Are you going to trade the New York session, the London session, the Asian session? You need to have a clear, definitive session that you're going to trade. And once you figure that out, for me, it's the New York session. So for me, markets are going to open at 6:30 in the morning here in California. And I'm going to trade off of the 5-minute time frame 80% of the time. So 80% of the time, I'm going to be looking at the 5-minute time frame. However, I also implement the 1 hour time frame to kind of give me areas of interest, areas of supply and demand, pivot points. So I'm going to use the 1 hour time frame to give me those areas of opportunity to where I want to enter trades. And then I'm going to manage my trades on the 5-minute. So for you, if you're looking at the daily chart and you're going to the 1 minute, you're going to the 2 minute, then next thing you know, you're sitting on the 15-minute, you're going to get confused. Make sure that you are looking at the same time frames each and every single day. Okay. Again, next thing you're going to want to highlight in this trading plan is clearly defined criteria for entering a trade. So this is going to come down to your strategy. It's going to come down to your edge. What needs to happen in order for you to take the trade? What needs to happen in order for you to take the loss or profit on that particular trade? A lot of traders have no idea where they're going to enter a trade. They're buying stocks because they're just shooting higher. They're shorting stocks because everyone says that the market's going down. You do not have a clear plan for entering the trade. Trades should come to you. You should not be hawking and stocking trades. Allow the chart to set up, allow for something to happen, right? Based on your strategy that's causing you to get into a trade. Okay. So if you don't get a trade today because nothing happened that aligns with your trading strategy, it's not a missed area of opportunity. It was a smart trading day. Just because the market is open doesn't necessarily mean that each and every single day there are stocks or moves or trades to take. Establish some certain criteria, some certain conditions for when the trade is in profit, you're going to take your gains off the table. Or when a trade is going against you, you're going to limit those losses. Again, I would never recommend anyone to enter into a trade when you have no idea where potentially you need to get out of that trade when it's going against you. Whether you want to set a hard stop loss or a hard mental stop loss, you need to have something that aligns with your strategy that is telling you, hey, when we break this technical structure or when we lose this moving average or when XYZ happens, I need to cut the trade. When I'm in a trade and it's going in my favor and I'm in the green, I need to start thinking about taking profits at this moving average, at this level of supply, at this level of demand, at this ATR, whatever the case may be, that needs to be well defined and that needs to be understood before you even take a trade. Let's say, for example, you're taking a trade in Tesla or you're taking a trade in the NASDAQ 100 and Tesla moves up $2 and you take no profits. What is the reason why you took no profits? Is it because it didn't align with your strategy or because you were sitting hoping for a little bit more? A lot of times traders will get into a trade, it'll go up in their favor, it'll come back down, it'll go up a little bit more, and then it'll come crashing all the way down and take a green trade from green to red, but when they could have gotten out at a specific level. So make sure you're understanding where you want to get into a trade. It's the same thing with the futures. If you guys are trading futures, if your strategy or your risk model or your profile is telling you that you need to start thinking about taking profits every 15 points or 20 points or 30 points, or hey, let's say, for example, you're trading levels, supply and demand, and you get into a trade and you see that there's 45, 55 points of potential that the stock can move, that the NASDAQ can move before we run into resistance. Well, I want to be taking profits at 30 points, 32 points, 35 points, 40 points. I want to take profits into that area. I'm not going to expect it to hit that area to a T. I want a specific area or a zone that I'm looking at. When something happens, I want to enter the trade. When something else happens, I want a reason to get out of the trade. So make sure all of these areas are clear. Again, next one is going to be risk management. Make sure you guys are setting up proper risk per trade. So again, if you have a $1,000 account, should you be risking $500 a trade? Probably not. Maybe you want to take that down to $25 or $50 or $75 per trade. If the trade goes against you and you're down $50 or $75, you need to exit that trade and in conjunction also have a daily loss limit. So I don't want you guys to go out there and go on full tilt and start taking 10 trades and losing $50 a trade and you're still down 500 at the end of the day. Again, how much you're able to lose is all in conjunction with how much drawdown you have if you're trading on a prop firm, or what your account balance is if you're on a personal brokerage account. So again, if you need to use stop loss orders to manage those potential losses because you physically can't click the sell button when the trade's going against you, then I would recommend to set up a hard stop loss. Again, with risk management comes position sizing. So position sizing is all based on risk tolerance. If I have personally a $100,000 account, I can probably afford to lose $500 on a trade and I'm not going to feel too emotionally attached to that loss. However, someone with a $2,000 account that takes a $500 loss is going to feel that a lot more than someone with a much larger account. So your risk, your position sizing is all based on your risk tolerance. Again, if you're just starting out, having a trade with 5 NQ contracts and making $1,000 feels really good until it goes against you in 2 minutes and you lose $1,000. You are not ready for that risk tolerance. You need to work up to that area. And again, it takes some people longer than others to work into that comfortability of losing those bigger losses. Again, with bigger losses definitely comes bigger wins, but with bigger wins also comes bigger losses. So again, that needs to be in your trading plan as well. Technical analysis. You need a few technical indicators, a few things. What are you realistically looking at? Are you looking at the 20 SMA? Are you looking at linear regression? Are you looking at the RSI? Are you looking at MACD? Are you looking at pivot points? What areas are you looking at potentially for entries and exits? So for example, myself, I am looking at moving averages. So when we get over a 20 period moving average, and let's say, for example, the 5 or the linear regression is 2 or 3 or 4 handles, dollars over, I want to take profits into those areas of supply. If you're trading the NASDAQ and this thing moves over a particular moving average or over a particular supply zone and it has 30 points, you want to make sure that's outlined in your trading plan so that when these things take occurrence, you understand when to get in on those particular trades. Also, news and events, take these into consideration on a weekly basis, on a day-by-day basis. We have news that drops, we have FOMC, we have numbers, we have jobs numbers, we have claims numbers, we have all of this stuff, inflation, we have all this stuff that's going on all the time. Are you going to be someone that does or does not trade the news? Put this in your trading plan. Would you rather sit patient and wait for the news to digest and then look for setups? Or are you okay with trading the news? Remember, with trading the news can be big moves in your favor or big moves against you. The next thing is going to be discipline and patience, guys. I can't help but emphasize the importance of discipline when you're following your trading plan. If you're looking at the charts and the market is open and nothing is happening, it doesn't mean that you're missing opportunities to make money. What you need to understand and do is utilize these times to enforce patience and enforce discipline, because a disciplined trader is going to be a profitable trader. Remember, the importance of patience is going to be one of your most pivotal points that you are going to have in your whole trading career. The moment you can sit on your hands for 30 minutes, an hour, 2 hours, even 2-3 days before you get that picture perfect trade that aligns with your trading plan and aligns with your strategy and matches with your risk management and is okay for you to take that trade, is the moment you're going to start having that breakthrough and being more profitable. It's the traders who are not patient and lack discipline that when they do not have a setup are searching for every single candlestick and every single stock and every single sector that's moving, and you're putting on a trade here and you're putting on a trade there, and you're just at this point, you know, you got 3, 4, 5, 6 trades open, you know, you got 4 trades going against you, you got 1 in your favor, the one that's winning for you, you only took 2 contracts, and the trades that you went 20 contracts on, you're losing on. Make sure you're taking the same amount of risk with each potential trade and you're allowing these trades to come to you. Again, guys, if you want to focus on this stuff and you want to build a trading plan and you want to get access to strategies that are working and you want to trade with other people, maybe you want one-on-one mentorship, maybe you want access to my watch list and my live trading webinars where you guys can get on the phone with me each and every single day live, either listen to me trade or talk to me while we trade. Join Evolution Traders. I've got one more space available. That link is down in the description box. To everyone else who is listening to this video and enjoys these videos, make sure you comment, like, subscribe. I'll see all of you guys on the next video.